My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome back, folks. Today, our special guest zooming in from the outskirts of New York City is Donato Settanni, and Donato has kind of had a lot of rough bumps in his syndication career to start with. I mean, he got the company started right before COVID hit, then wham, we went into kind of a global shutdown. He made it through that. Now we got the whole situation that all syndicators and multifamily folks are going through, as well as a lot of folks in all kinds of real estate categories with, crazy interest rates comparatively to what they used to be. And, the prices kind of going down. But in spite of all of that, Donato and his team are still doing deals and growing the company. So Donato, welcome to the call. Great to have you.
Thanks, Dave. Great to have me today.
Yeah. So Donato, give us a little snapshot, zoom out if you would, 30,000 foot. What does your portfolio as of mid 2025, when we're recording this, what does it look like? How many properties, how many doors, what kind of market areas are you guys in?
So we are mostly in the Southeast right now. We've got about 500 units actively managed. We have another 400 units under development in the Northwest. And that's what we're doing right now. So we focus mostly on value add type properties, and then we're also do ground up development.
Okay, well, I didn't clue into the ground up development side of things. Have you been doing that since day one, or is that kind of a newer part of the business for you guys?
Yeah, so I'll call it my pedigree from before starting the company was in New York City high-rise development. So it was always something that we were going to do. But we didn't want to do that as our first project. We wanted to get our feet under us and started to get some stable cash flow coming in before we started taking risks on larger development sites.
Okay, very good. All right, so maybe to kind of walk us through what value add looks like for you, can you give us an example of, let's say, one of your favorite deals and kind of what the before, during, and after looks like?
Sure. One of our best deals actually was we closed on it in April 2020, as COVID was shutting
Right, the
everything
beginning of it.
down.
Yeah.
We did a remote closing. The title office wasn't even open. So it was a real fun time for us. But on
How many
that
units
project,
was that one?
that was 104.
Okay.
So on that project, we put around 20,000 a door into the property. And that included interior renovations, silestone countertops, all new cabinets, full box new cabinets, new vinyl plank flooring, and then a whole bunch of work on the exterior, including, new landscaping, painting the buildings, adding a clubhouse, the whole nine.
Very nice. So what does it look, is it still in the portfolio, or did you guys exit that one?
We were able to exit that one in about 18 months. So we did a
Nice,
very
very
fast
nice.
turnaround. The market was very good at that point, and
Mhm.
we decided to take the win.
I don't blame you. No, that makes a lot of sense. So what did that kind of, if you don't mind sharing some numbers, what was that looking like to get into the project and fix it up? And then what did the exit look like financially for you guys?
Yeah, so we bought the property for $5.7 million. We ended up putting about 1.3 million into it. We hadn't touched all the units yet. We were able to sell it for 13 to 18 months later.
Wow. That's a good start to your syndication career, that's for sure.
Yeah, that was a good one. That
Yeah,
was
yeah. So Donato, things have gotten a little bit more challenging over the last couple of years. How has that affected you guys?
Right now it's very tough to find new deals, and the amount of effort we're putting into our existing portfolio has also gone up significantly. We are very cost conscious at this point to
Hmm.
make sure that our operations are running efficiently. And we're constantly just trying to find new ways to eke out some cash flow, not only for our existing portfolio, honestly, but to then take that knowledge, say, can we do in our existing portfolio? Can we make a change that works? And then can we underwrite that way in order to win something new in this tough market? So that's really, we've got this inward focus towards that. We're obviously still bidding on projects every single week. But those are the challenges. It's hard to buy stuff right now, and it's hard to operate right now.
So have you found anything that's kind of moved the needle for you guys in that respect as a way of creating more cash flow from existing units and then also applying that to your buy box moving ahead?
Yeah, so I think we were ahead of the curve and now I think that the entire market has kind of taken this on, but we were ahead of the curve with introducing the AI chatbots onto our websites.
Okay.
We think we were ahead of the curve with switching off apartments.com for advertising and going direct Google marketing. Now I'd say those paybacks are a lot less than they were, but they were helping us enormously get ahead of all of our competition within the marketplace. But now we've actually, one of the newest things that we've done is we're using HappyCo, which is it's like a management tool on site. And basically, all of our maintenance and leasing people need to input information and update inspections with pictures. So
Okay.
as we're managing remotely, we're able to see on now a weekly basis that like, yes, the pool is clean and the filter's running. Yes, our signage looks good. The lights are on at night. The landscaping looks good. So it's just another set of eyes to make sure that things are happening, um, to just make us efficient and make sure that we're providing the best product we possibly can.
That's very cool. I'm not aware of that product or that program. Does that also utilize AI to kind of figure that stuff out for you, or do you have to
Yeah,
manually
no, that
visually
one's
put eyes on?
not, that one is not AI based, call it. It really is just setting up, you're setting up inspections that
Mhm.
happen on a cadence, and then your staff has to follow through and do those inspections and submit the reports. And then it automatically integrates into Yardi. So every time there's a work order, it pops up there. It'll give you statistics on how long work orders are taking, what type of work orders take longer. And then if your maintenance people are doing it well, you're seeing how they solve the problem, maybe some pictures sometimes of how they solve the problems and thus forth. So you're better able to just analyze that data across your properties to understand like what maintenance people are operating at a higher standard than others. Is there something stopping someone from maybe operating at a higher standard? It just allows us to dig in a little bit further.
Very cool. So, a couple of questions come to mind. You started off your career in the high-rise development space. Then you hung your own shingle a number of years ago, 5, 6 years ago now, pre-COVID. What have been some of the biggest changes you've seen yourself professionally switching from, I'm imagining, kind of the employee role into the ownership role, and what's kind of been like a light bulb moment for you from that?
I get asked that question a lot from friends and family. I think for me, on the plus side is the freedom. So the freedom of being your own boss and making your own decision is great and it's enormous. And then on the flip side, there's the responsibility. There's
Hmm.
no board, that you could kind of hang your hat on. Oh, the board told me to do this, or let me go ask my boss. And then, there's this
Ooh, that I'm looking at him right in the mirror.
mysterious guy behind the curtain that made the decision. No, it's you, and the buck stops with you. So
Yeah.
I think that's the biggest challenge and the biggest blessing of taking the leap out onto your own and into your own business.
Now, what about the ground up development work that you guys are doing? It sounds like you got some big projects. I think you said 400 units. You're in the process of.
426 units, yes.
Nice. Is that like one really big project or several smaller ones all kind of How's that? What does that look like?
So we have one very big project north of Seattle. We actually own the land for a site two next door. So as soon as this one gets off the ground, we hope to start entitling the next phase.
Very nice. So is that going to be a high rise type building or is it kind of lower rise? What is
Yeah,
it?
it's called podium, so it's an 8 story, 3 stories of concrete, and then 5 stories of wood.
Okay.
A lot of what you'd see in like Atlanta or Seattle.
Right. Okay. Very, very cool. Well, that is exciting stuff. So where do you guys see yourselves going over the next 12 to 18 months? What wave that realistic magic wand? What would you like to see happening?
We firmly believe that in this tough market is when you want to be buying. Um, obviously the tough part is it's like when the stock market's down, convincing yourself and others that it's the right time, even though you
Yeah.
inherently know it's the right time, just because it's hard to make things pencil out. It would be irresponsible to predict 5 or 6% rent growth, right? But it could
Mhm.
happen because supply is dropping off a cliff. So we would like to be net buyers over the next 12 to 18 months, and we'd like to buy around 500 units in the next 12 to 18 months.
Very nice. So, Donato, a big part of syndication for a lot of folks is the capital raising side of things. What what do you guys do for that at this point? What do you focus on?
So up to this point, we've been friends, family, and I'll call it that enlarged circle of friends and family, just word of mouth investors. We're lucky enough that we have a strong foundation of people that believe in us, and we've been able to grow organically from that. I will say the Seattle project, we are working with our first institutional sized investor.
Nice.
So that is a totally different path, but we got all the entitlements with our group of friends and family capital, and they'll take the ride with us all the way through the building getting complete. So it'll be a pretty cool mix of the friends and family and then an institutional investor alongside them.
So, is that the model you're planning to keep doing moving ahead, or what are your thoughts about future projects?
So we just given where the market is right now, we think we'll stay with friends and family type investments in the next call it 12 months. But that yes, that is the plan. That as we get larger, we pair our friends and family equity with institutional equity um, and keep growing that way.
Very cool. Donato, I'm not sure if you're familiar with Robert Kiyosaki's concept of unfair advantage. Actually, I don't even know if he came up with that, but he's the guy I heard about it from. So he talks about all of us have what he calls an unfair advantage, something that we're better at than most people, something that comes easier to us than most people. What would you think your unfair advantage might be?
My unfair advantage, I would say I understand how to build. I could usually just see it, and although I don't have all the skills in every single area of building, I know where to ask the questions
Hmm.
to get the answers. So I think that's what we pride ourselves on. We do a lot of the construction management in-house to save money and be efficient. Um, and then also on the development side, that has been helping a lot. Just keep costs down and find efficiencies by asking the right questions, really.
Yeah, that makes a lot of sense. Awesome, Donato. Well, hey, thanks so much for being on the interview. This has been a lot of fun. I'm sure some of the folks listening or watching this would like to connect with you if they could. If you had to send them one place, whether that's a website or your LinkedIn, where would you recommend people go to find out more about you and your company?
I would say go to www.dxeproperties.com. You could find all sorts of information about us, read our newsletters, and reach out if you'd like to.
Awesome, Donato. Well, hey, all the best with the project in Seattle. That sounds really exciting, as well as all of your goals and aspirations moving ahead.
Thank you. Thanks for having me.
All right, everybody, take care. We'll see you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.